Do you need to move, but you're feeling trapped in your current house because of your low interest rate? Can't believe that's a thing. It is a thing. What should you do about it? I've got 3 steps, that and more coming up. My name is Mike Bernard. I'm the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. I give you 2 examples. One, I was talking with a coworker, colleague, friend here at Korhorn Financial Group, and we've got a team of about 80, 90 people, and he made a comment to me that I can't believe you haven't done a video about how many people need to move but can't because they're basically unable or unwilling to trade their 3% mortgage for a 6.5% mortgage. And I said, hey, I've done a couple. I don't hit it all the time, but I've done a few. And so counter that with a client that I was talking to recently who's been has earmarked next spring as a time when they were going to be moving because their youngest child was going to be going off to college. And for a decade or so, has been planning on moving at that point. Well, we know they're not going to be debt-free by then, and therefore, in order to move, they're going to have to not only pay higher prices, and you could argue, and I would too, that, well, they're going to be able to sell their house for more than what they thought a few years ago. So yes, they'll have to pay more for the new house, but they'll get more proceeds from their existing. But they're going to have a mortgage. Their current mortgage right now is less than 3%. And therefore, to have a larger mortgage at a higher interest rate, we just started doing the math on that, and it is a staggering. They both were just unsure. Well, we've been planning on this for a long time. Is this even something we should do anymore? So, do you feel trapped? I mean, my coworker, my friend, he said, well, we've got 1 child. We're hoping to have a larger family, have more kids, and our 3-bedroom house in this area isn't really the plan. That's not where we intend. It's not the community where we intend to send our kids to school. And the house is small enough that we can have 1 and maybe even welcome a second. But as the kids get older, we're not going to be able to stay here. Do you feel trapped? Well, recently I saw this article. Apparently over 80% of homeowners feel trapped in their current house because their interest rate is so low that they just can't even consider moving because the new interest rate will be so much higher. Therefore, their monthly payment will be so much higher. Therefore, it would crowd out some other either goals in their financial life or other wants or needs in their financial life, and they just can't afford to do it. They feel trapped, and therefore, and I've been saying this over a year, gosh, I wonder even as interest rates go up, if housing prices don't go down because the inventory will stay so low. There will still be so few houses on the market because no one will want to list their house and trade their 3% mortgage for a 7% mortgage. Therefore, prices will stay stubbornly high, guys. That's, unfortunately, that hot take has turned out to be the case. No one, that housing prices, housing values, yes, if you own a home, you don't want the value to go down. And yet, we all were sort of expecting as interest rates would go up, housing values would go down, and that's not the case. Houses are more unaffordable. Therefore, if you're feeling trapped, what do? Do you just sit there and wallow and maybe bellyache to whomever will listen to you? Or is there something that you should be doing financially? As a certified financial planner, but also just how I've been wired, I'm not someone that just sits around idly and maybe bellyaches or complains. What can you do? Absolutely, there are things that you should be doing. The first thing that you should do, if you're looking saying, this is not the house that we are able to stay in, we need to move, ideally right now, but at some point coming up, we've got to make a move when interest rates get better or whatever. Then the very first thing you need to do is calculate what your new mortgage payment would be. And you might say, wait a second, that's jumping a couple steps ahead. No, if you know you need to move, then you know what you're looking for. Go on Zillow, go on Realtor, go on wherever, and take a look and say, well, what you think you need to move to, how much does that cost? If, for example, your current house is, maybe $225,000 and the new house is probably going to be around $325,000, then what would that new mortgage be on that new house? So if that's your purchase price, okay, what would your proceeds be if you sold your existing house for $225,000, paid off your mortgage? How much could you put down on that new house? That will then tell you how much your mortgage will be, and use a payment calculator to determine what your monthly payment would be at the 6.5 or 6 3/4 interest rate. So that new loan at the new interest rate for 30 years or whatever. Don't forget to add in your escrow, what your property taxes would be. Those would be higher on a bigger house. So once you've done that calculation of, well, here's what the new payment would cost. Here's what the new payment would be at this more expensive and higher interest rate house. Oh, I don't like that. You then build that into your existing budget. Start making that new payment on that more expensive house, but not to your current mortgage, because that would be paying extra on a really low interest rate. Instead, continue to make your normal monthly payment, but open up a new bank account called, house savings or new house or something like that. And the difference between what that new mortgage payment would be and what your current payment is, start saving that into that new savings account. Why would you do this? Well, it's going to help you build in what this new payment will be in your budget, and everything else will start fitting around it. I'm a big believer in the rock analogy, made famous by Stephen Covey. Basically, what are your biggest priorities? What are your goals? Or financially, what are your biggest priorities? Put those rocks in first, and then the other important things will fit in around it. And then all the gravel or the sand, life's just, the coffees and the little expenses will just fit in around that. Okay, so if a house is one of your biggest financial priorities, then calculate what that new payment would be, put that in first and build your budget around it. And so a couple powerful things happen here. One, over a couple months of this happening, you've built your budget around it. And therefore, if prices don't come back down, or if interest rates don't come back down, when it's time to make the move, financially, you've already proven it fits within your monthly budget. But the other thing is, you've built up extra cash. You will use that. That will help you either make a better down payment, more down payment, help you with your transition or the move or whatever. You'll have more resources built up so that when you definitely need to move, you're more able to do it financially. So that's step one. Calculate what your new monthly payment would be, and it's going to make you want to throw up because it's much higher, and start making that new monthly payment, even if you're just making part of it to yourself. And then the last step, once you've calculated what that new monthly payment would be, starting to pay yourself, that's step two. And then the final step then is make sure your current house is in ready condition to sell. That way you can be nimble if you need to be. Just take a look at this. If you are able to wait it out, if you feel trapped by your current interest rate and you're able to wait it out until interest rates come back down, mortgage rates come back down to 5 or 4.5%. If that happens, and that normally is going to happen, it's going to coincide with a bad economic time period. Normally interest rates just don't go down on their own. They go down to try to boost an economy. Well, the only reason you'd boost an economy is if it was slowing down. And so if that happened and prices came down, then guess what? Your house might not be as attractive as it is right now when it's sort of a firmer market, when there's not as much inventory. Therefore, you've got to make sure that your house is in a great condition to sell. That's number one. Number two, what if houses don't come back down? What if interest rates don't come down and housing values don't come down, and you're being trapped in this mortgage where finally you just need to say, we've got to move. It's now time to move. We've got to change and exchange this 3% interest rate for a 6% interest rate. Then having your house be in ready condition, you'll need to buy before you sell, but because your house is in such great condition, you'll be able to sell your house quickly. Okay, so that third step is make sure that your house is ready to sell. Even if that means talking to a realtor today to say, hey, can you walk through my house and point out the issues that might not help our house sell very quickly right now, and talk through some things that we could do so when it is time to hire you, Mr. or Mrs. Realtor, that the house will be in great condition, we'll be able to sell it quickly. They'd be willing to do it. They call that a market analysis, and they'd be willing to do it. Now, you've got to make sure that they're a trusted advisor and that you trust their advice and so on. That might that might require some cost. And therefore, if you've done the first 2 steps and you're starting to save up some dollars, maybe you decide to do a cost-benefit analysis to say, yeah, we're going to use some of this savings to actually update the countertop or change the carpet or whatever, implement some of the things that the realtor said. So if you're trapped in your current mortgage, number one, recognize that's not a bad thing. That's not a bad thing. You've got a 3% interest rate on your mortgage. That's fantastic. But if you know you need to move and you're feeling trapped, and you don't want that move to just, well, let's just hope rates come down or costs come down, then step 1, calculate that new payment. Step 2, start making that new payment, even if it's to yourself. And step 3, get your house ready to sell so that whenever it is time for you to make a move, you're ready to do so. Work with your certified financial planner on that. If you don't have a CFP on your team, contact one on my team. Find us online, Korhorn.com. That's Korhorn with K, wisemoneyshow.com. You can find us there as well, or send us an email, info@korhorn.com. All right, there you have it. Go out and take your next wise step in your financial life.